Welcome back to XRP Update, your trusted source for daily crypto news, XRP analysis, Bitcoin updates, and everything happening across the digital asset market. Today, the crypto market is once again turning extremely volatile as Bitcoin faces heavy selling pressure, while Ethereum and XRP are trying to hold key support levels despite growing fear across the market. Right now, traders are watching very closely because the next few days could decide whether this is simply a temporary correction or the beginning of a much larger bearish move across crypto. Bitcoin has already dropped toward the $76,000 range, liquidations are exploding, ETF flows are turning negative, and overall market sentiment is weakening rapidly. But at the same time, something very interesting is happening beneath the surface because some altcoins, especially XRP and Ethereum, are still showing signs of resilience, even while the broader market struggles. So in today's update, we are going to break down exactly what is happening with Bitcoin, Ethereum, XRP, Dogecoin, Solana, and the overall crypto market, why traders are becoming more cautious, and what support levels investors absolutely need to watch from here. The crypto market woke up under pressure today, as total market capitalization slipped toward $2.56 trillion. While prices moved lower across most major cryptocurrencies, trading volume actually increased sharply towards $65 billion. Normally, when volume rises during a market decline, it signals stronger sell-side activity and growing fear among traders. That is exactly what we are seeing right now. Investors are becoming increasingly nervous as uncertainty spreads throughout the market, and many short-term traders are beginning to reduce risk exposure. One of the clearest signs of weakening sentiment is the Fear and Greed Index, which has now dropped below 40. Whenever this index falls into lower territory, it usually reflects growing fear among retail investors and uncertainty about short-term market direction. At the same time, Bitcoin dominance has climbed back above 60%, showing that investors are once again moving away from riskier altcoins and back toward Bitcoin for relative safety. This kind of rotation usually happens during uncertain market conditions, when traders become more defensive overall. Another major concern hitting the market right now is the sudden shift in crypto ETF flows. Over the last sessions, Bitcoin and Ethereum ETF products have recorded more than $350 million in combined outflows. That is important because ETF inflows were one of the biggest bullish drivers behind crypto momentum earlier this year. When institutional money starts slowing down or temporarily leaving these products, market confidence often weakens very quickly. Investors closely monitor ETF activity because it gives insight into how institutions are positioning themselves within the market. At the same time, funding rates across major exchanges are still slightly positive. This means long traders are continuing to pay shorts even while prices decline. Normally, this signals that many traders still expect the market to recover despite the ongoing correction. However, it also creates a dangerous setup because if prices continue falling, over-leveraged long positions could face additional liquidations very quickly. And that is exactly why volatility has increased so aggressively over the past 24 hours. Liquidations across the crypto market have now crossed $660 million within a single day. That number alone shows just how aggressive the recent price swings have become. Whenever liquidations rise this quickly, markets often experience emotional trading conditions where panic selling and forced exits accelerate downward momentum. This is why traders need to stay extremely careful during periods like this, because volatility can move prices violently in both directions within a very short time. Now let's talk about Bitcoin, because BTC remains the biggest driver controlling overall market direction right now. After breaking below a key bullish structure recently, Bitcoin entered another wave of heavy selling pressure. The price has continued losing local support zones one after another, and traders are now watching a critical demand area that could decide the next major move. Bitcoin recently touched an intraday low around $76,700, and many analysts believe that if the current support fails, Bitcoin could quickly slide towards $74,000 next. Technically, Bitcoin recently broke down from a rising wedge pattern, which is usually considered a bearish setup in market analysis. That breakdown already triggered nearly a 5% correction, but analysts believe another 2 to 3% downside move could still happen if buyers fail to step in soon. Momentum indicators are also not looking very strong right now. The RSI continues trending lower, showing sustained bearish pressure across the market. Meanwhile, Bitcoin is approaching the lower Bollinger Band support near $75,800, which many traders now see as one of the most important support zones on the chart. If bulls manage to defend this area and trigger a strong rebound, confidence could slowly return across the crypto market. But if Bitcoin breaks below $75,000 with strong selling volume, the correction could become much more aggressive. Right now, the market is sitting at a very delicate moment, where one strong move could completely shift sentiment in either direction. That is why traders around the world are closely watching Bitcoin's next reaction near these levels. Ethereum is also facing serious pressure after failing to maintain momentum above the $2,300 level. Once sellers regained control, ETH quickly dropped toward $2,120, while trading volume increased by nearly 4.5%. Buyers did attempt to defend the $2,100 support zone, but so far the rebound looks weak and lacks strong conviction from the bulls. Because of that, many analysts believe Ethereum could retest the important $2,000 support area again in the near term. From a technical perspective, Ethereum recently broke below a major support zone between $2,168 and $2,178. That breakdown gave bears more control over short-term price action. Selling pressure remains strong around the current range, while buying demand still appears relatively weak. At the same time, the RSI indicator is hovering near lower levels, suggesting Ethereum could continue drifting downward unless stronger volume returns to the market. However, Ethereum's next move will depend heavily on incoming trading volume. If buyers suddenly return with stronger momentum, ETH could stabilize and attempt another recovery bounce. But if market fear continues increasing and Bitcoin remains weak, Ethereum may struggle to hold current levels. This is why many traders are avoiding aggressive positions right now, and instead waiting for clearer confirmation before entering the market again. Now let's focus on XRP because despite the broader market weakness, XRP is still showing some signs of underlying strength compared to several other altcoins. XRP recently lost the important $1.40 support zone, which initially worried many traders. However, the ascending trend line underneath the price continues providing support and helping prevent a deeper breakdown for now. After testing that support area, XRP managed to trigger a rebound that attracted fresh buying activity into the market. According to technical indicators, the Chaikin money flow, also known as CMF, recently turned bullish again. That signal suggests liquidity is slowly flowing back into XRP despite the broader market correction. In many cases, improving liquidity inflows during weak market conditions can become an early sign that buyers are quietly accumulating positions beneath the surface. This is one reason why some XRP traders remain optimistic, even while Bitcoin and Ethereum continue facing heavy pressure. Still, XRP bulls are not completely safe yet. Analysts believe real bullish confirmation will only happen if XRP successfully reclaims and closes above $1.40 again on the daily chart. Until that happens, the risk of another pullback toward $1.34 still remains possible. However, even if XRP temporarily falls below the trend line, the lower Bollinger Band support may help stabilize price action and create another rebound opportunity. Because of this, many traders believe XRP still has a stronger chance of maintaining its broader bullish structure compared to several other altcoins currently under pressure. Looking at the broader picture, the crypto market is clearly moving through another fear-driven correction phase. Weak sentiment, rising liquidations, negative ETF flows, and heavy resistance rejections are all creating pressure across digital assets right now. But at the same time, selective rebounds and improving liquidity indicators suggest the market may still attempt a short-term recovery if key support zones continue holding. For now, caution remains extremely important. Traders should avoid emotional decisions because markets like this can reverse direction very quickly. Bitcoin still controls overall sentiment, Ethereum needs stronger buying pressure to recover stability, and XRP must reclaim higher levels to confirm renewed bullish momentum. The next several trading sessions could become very important because they may determine whether this correction deepens further or transitions into another recovery attempt across crypto markets. That's all for today's crypto market update. If you enjoyed this video, make sure to subscribe to XRP Update for more daily XRP news, Bitcoin analysis, and crypto market breakdowns. Let me know in the comments whether you think Bitcoin will hold above $75,000 or if the market is heading toward a deeper correction. Thanks for watching, stay safe in the market, and I'll see you in the next update.